Okay, I think we are live. Not quite on time, but if you're expecting us to be on time, then I guess you're just SOL. These days, this is Dude, What's the Bid? I'm Kevin Hill. I am your co-host here from Brush Pass Research. As always, I got Casey Larkin from Farelanes. How are you doing today, Casey?
Howdy, doing well. It's a happy Thursday around these parts. Even better, getting an opportunity to sit down with Hammer and Hank here. So
I know. We have the guest of guests here, Hammer and Hank, Henry Byers over at KCH at Transportation, which always throws me for a loop when I say KCH because those are my initials.
Oh, no way. That's
It
hilarious.
is. They are my initials, not my company, though.
What's the middle name, Kev?
Carl.
Ha! I love it.
Yeah, Carl. So we
all
work.
Strong middle name, dude. Strong middle name.
I know, right? I know. It's great to sit down and talk with you again. It's been much too long. We're all colleagues at FreightWaves and talk about the market constantly. But now,
yeah, that nickname came from George Abernathy, that Hammer and Hank, that moniker there. Yeah, that's a throwback.
Yeah, throwback days, right?
Absolutely.
Yeah, we just sat around and talked about the market all day. And
pre-COVID, man, in the office.
Pre-COVID in the office. Talking about the pull forward. I remember the pull forward back in 2019. It seems like ancient history now.
It does.
Yeah, we talked about all that. Right, it was mid 2019, but really about a year before COVID.
Yeah, we were talking about Trump and the tariffs, right?
Yeah.
I mean, and it's just interesting to see, Trump is, up for election. We'll see what happens there, but nonetheless, I think the shippers are certainly thinking about potential tariffs. Not only have those ones that were put in place are still a concern, but they're potentially further escalation. I think they'd be reasonable to have contingency plans in place, and that's probably adding to a little bit of this import surge that we're seeing.
Yeah, I was going to ask you about that when you're talking about the pull forward. Are we? Let's take a step back before we answer this question. Are we seeing pull forward again? But what have we been seeing over the last few weeks when it comes to containers, right? Because I know a little bit about it. I haven't been as deep and thorough as I was at one time. I'm just a market observer now, maybe not per se an analyst, where I'm looking at the data every day like you guys are. But yeah, let's fill in the audience about what we've been seeing in container traffic and the anomalies in that over the past few weeks.
Yeah. I mean, it's a few factors, right? I mean, but I think primarily what you're seeing, I would go back to earlier this year, really Q2, saw a lot of reports of consumer demand. I mean, let's talk about consumer demand, just how resilient, right? I mean, we could talk about delinquencies, we could talk about this potentially going on, in the credit card debt and a lot of the spending. However, despite the inflation, consumer spending, consumers have remained, have showed up, continued to show up. And so those inventories running a little bit low, coming out of Q2 led to a pretty healthy restocking cycle. But then you've also got the fact that the Chinese economy is also not looking so great. It's super dependent on exports. So if you look at how they would typically try to drive those exports higher, the U.S. is going to be where they're going to try to, push a lot of those goods. But it's not just China. I mean, we're seeing, a lot of the factors of production move to further Southeast China. Imports are moving from there as well. So I would attribute most of it to this restocking cycle, these downstream. If you look at the LMI between upstream and downstream inventories still being in contraction. It's a lot of these companies that are running more of a just-in-time, inventory management style now coming off the heels of that just-in-case management style that in my mind are leading a lot of this volume here in the last few weeks, where volumes have continued to stay elevated, despite expectations, right? I mean, it was one of those things where that pull forward made sense, but now you can't really call it a pull forward. This is really just like a typical peak season at this point, but it's just been a prolonged elevated period of imports where, you broke records in Long Beach and Los Angeles in July, broke a record in New York. I expect to potentially see more records broken on a monthly basis, but beyond that, it's, now you have these East Coast port strikes potentially. So you're getting more volume just in terms of contingency plans, push West Coast, even though some shippers are saying, we don't really feel like a port strike's going to happen. New York, New Jersey, interestingly enough, import volumes just hit a record high just in the last couple of days. So some people are rolling the dice, obviously. So I think this is going to be a pretty well balanced flow of imports here. But I think it's all those factors that are really attributing to the surge.
Huh. And what makes you think that, I can remember a couple instances in the last 5 years, but what makes you think container volumes are a leading indicator for the market? Are there any kind of past stories where, this is a KPI that led the move up or down?
Yeah, well, I think Kevin, with what he was talking about with that pull forward, if you look back really to 2014, 2015, you look at, between there and pre-COVID 2019, you really saw, the port strikes 2014, 2015 really opened people's eyes to the fact that if this volume gets held up and gets congested long enough on the West Coast, then it could potentially, spill over into the truckload sector, which we obviously, saw that then. We've seen it a couple of times since. But I think, the pull forward specifically, you had these deadlines that they were bouncing up against. So like the shortest amount of time between China and the U.S. is obviously the West Coast. So you had, again, these West Coast volumes and the rails, basically getting, at max capacity where they're starting to, the dwell times tend to be longer and bouncing up against the, the peak holiday retail season, leads to that spillover. And we're seeing it now. I think we're seeing it, I've talked to some people, they're seeing 60 to 70% more transloads out there on the West Coast at the moment. But what happens is as that timeline narrows between that volume that's on the water and it needing to get to its end destination to actually make it there by that peak holiday retail season, that gap, that timeline is shortening every single day. And so when that volume gets here, it's going to be already urgent. It's going to be already hot. And the only way to really, satisfactorily and get it there in a timely fashion is to get it into a truck. It just is what it is. So I think there's really high exposure to that at the moment. I think you're going to see a lot more of that, but it all comes down to that timeline, like how much volume is there and able to get distributed before this other volume arrives. Because what COVID did do was actually, increase capacity in a way where these ports are probably as capable of handling this incoming volume as they've ever been. But that doesn't mean that they can handle this amount of volume, right? It's almost beyond what they're capable of handling. And specifically the rails, right? The rails, it's not like they went and added a bunch of rail cars. So I think that the rail specifically is most highly exposed to service failures at this point.
So, we might be in a prediction where we might have a few ships offshore waiting to load. I mean, nothing like we saw during the pandemic of, I forget the number now, 100 to we're triple digits out there. But are we seeing that type of surge where we're going to be running at 100% at the ports?
I'm not so sure. I mean, I don't think it'll be to the scale, obviously, like you mentioned, but I think that you could see, 10, 15 ships potentially.
Okay.
Right. I just think the backup, if you look at international rail volumes coming out of Los Angeles, I mean, they're remaining high even despite Labor Day. Like the moving 7-day average, that typically you'd see a big drop on a holiday is still remaining high. It just seems like a lot of these companies, this is what we had before COVID in 2014, 2015. A lot of companies would go West Coast and rail, over closer to the Mississippi Valley and maybe even a little further east. You're seeing that pick up a lot here in the last, month to 2 months. And I think that that's the freight that's particularly exposed because that's freight that would have gone East Coast. But now these contingency plans being in place, these timelines, narrowing, getting closer to them needing that product. I think, getting it to a truck on the West Coast and expediting it will be, one of the best options. So I don't think the ships waiting off the coast, I mean, it's hard to really say at this point. I just don't think it's going to be sustained for long enough. Like we're already seeing it get pretty choppy at origin rates and volumes both. So I think, if volumes continue for whatever reason for the next 4 months, sure, we'll reassess. But I think, maybe 10 to 15 ships at the max, but I still don't even know because
Yeah.
the distribution of volumes at this point for the U.S. imports. When we're saying that people are continuing to send volumes East Coast and along the West Coast in general, you just have a diversified network right now. Like they've been battle tested, they've been through the ringer. A lot of these shippers are really well set up to kind of navigate between ports.
Right. A lot of the ports have been on the East Coast specifically, and even some other ones on the West Coast. I can remember having worked with their marketing and advertising teams. They've all been investing in cranes and increasing their capacity. So I don't know. I do remember waiting for my golf clubs that were sitting off the coast of Long Beach back in 2020 for like 6 weeks or 8 weeks, just checking the tracking every day.
Right.
Sitting there. But I don't know. Hopefully there's enough capacity at other ports these days to avoid.
Well, I will say this, if you look at container rollovers, Project 44 monitors like the amount of containers getting rolled over at transshipment ports, the percentage of overall, volumes that are getting transshipped, how much miss their intended vessel will get rolled to the next. It's been above 40% for weeks now, and it really hit one of the highest points ever in the last couple of weeks. It's starting to trend down a little bit, but we'll see if that holds. But so the traffic jams, also occurring at these transshipment ports. So if you can imagine Vietnam that can't service these larger ships, they take that volume, they transship it in Shanghai, Busan, maybe Singapore even, and get that volume on a larger ship. Those ships are now fuller as they're coming. So again, could potentially happen, but I think there's just not enough going on in the economy at large. There's really no stimulus. It's just there's been enough wind taken out of other parts of the economy that just the whole truckload market as a whole, it's just looking a little bit weaker than it looked prior to July 4th when it really looked seemingly pretty bullish because you saw rail volumes spilling over like we thought they would. Long haul volumes ticked up, but then it seemed like people were taking a wait and see approach over the from July 4th forward until now. But I just can't help but think that timeline. If you're not meeting consumer demand in this retail season and the economy goes further south, you're going to really be in trouble. So these importers, these retailers all know that. So they're really going to be pushing to push this inventory through because their inventory management styles are different than they were 2-3 years ago, right? They're running leaner inventories on that downstream portion.
Yeah, the economy is certainly the U.S. economy is an interesting story right now because, as you're saying, that there's no real urgency. There's nothing really happening that's really hopping all that much. I mean, you just have the continuous story of the bedrock of the economy is the American consumer. No matter what, will not stop buying useless, non-needed stuff. We're going to buy. No matter what happens, we're going to buy. Is this more of a return to seasonality? Because we lost seasonality for about 3 or 4 years. I mean, it was all hot, then all cool, but no seasonality. That normal pattern of seasonality. Is this just seasonality coming back, or is this a little bit? Is this seasonality plus a little bit more?
Well, it's really interesting. Let's just talk about the freight, that's most interesting right now, the import freight. Peak season certainly is we haven't seen a traditional peak season since before the tariffs and you're talking about that pull forward created a really wonky set of metrics where, if you looked at, each quarter totaled in aggregate, you would see, some seasonality that was pretty strong. Meaning, obviously the second half being stronger than the first. However, this last year, because we really like looking at that moving 10-day average on that IOTI, that this past year is really that more traditional peak season where you see volumes really start to pick up in July, continue through August, and really start to trail off at the end of September around Golden Week. And so it's one of those things where moving into the truckload sector, man, we just had one of the strongest seasonal disappointments in terms of spot rates in over 5 years. If you look at National Truckload Index includes fuel plotted on a 5-year seasonality chart. In the forecast being weighted on that seasonality, right, as a forecast should, right? If there's such strong seasonality that it's happened in the past 5 years, what's the chance it's going to happen this year? that's really strong, right? So we actually saw spot rates not only remain basically flat over the last couple of weeks, but also have been trending down in the last couple of days.
Mm-hmm.
To me, it just says that a couple of things, that the seasonality in spot rates, we're starting to see a signal that something's off here. Sure, we can talk about the economy. It's almost like the economy comes out when the truckload market wants to show signs of life prior to July 4th. And it's like, not so fast. Let's go ahead and go a little further to the south and bring the truckload market back down with us. But you look at, again, prior to July 4th, man, we saw these really interesting signs that made me think, very optimistically about what we would see, in the remainder of the second half. That could still possibly happen. But if you look at contract rates, they started to trickle back up around July 4th. So you look at contracts being signed between July, August, and there's a lot of those bids that are going to be signed at that point. If those teams were sitting down with the global supply chain teams, the global supply chain team saying, dude, we are an incredible risk for rates to go up at this point. We've chased the market down. We've already said the bottom of spot rates was in May 2023. We're highly exposed to any volatility. We're already seeing container rates triple, quadruple what they were just a few months prior. I bet that scared so many of those, comprehensive logistics global supply chain teams into saying, we would be better off signing a little bit higher contract rates on the truckload side in maintaining service levels as opposed to chasing the bottom further and be staring down the pike of a robust peak season, spill over into the truckload market, and all of a sudden, spot rates are surging. I mean, they've seen that happen time and time again. And I think they're armed with better data than they ever have been. So a little bit different seasonality depending on what you're talking about. But I think on the truckload side, which we're specifically talking about here, very disappointing for what happened throughout the last week.
So real quickly, so on the ocean side, especially on the container side, you're probably seeing shippers react quicker based on what happened in the pandemic. So they're acting quicker, bidding up the price, and that's where we're seeing the price action. Whereas in a decade ago, people would play it safe, play it out. They might get stuck with a little bit higher rates, but their expectations wouldn't be for $15,000 containers, where it's kind of fresh in their memory right now. Is that we better get in here fast.
Absolutely. Okay. And I think so. Okay, you're sitting down at the table, you're looking at peak season, you're looking at let's just talk about the National Retail Federation and the companies that they would represent. A huge amount of those companies are highly exposed to the second half, it's peak holiday retail season. You start to see the Red Sea happen. You start to think about the Panama Canal drought. I mean, a lot of these things have been reorganized. Things have been shifted. Contingency plans are in place, but you start to look at that rate alone. And like you're saying, or I think alluding to, is the fact that price action makes you say, oh my gosh, if rates continue that current trend, they could double during peak season if imports stay higher. And so, I think that's certainly been, has attributed to some of that. It's not just pull forward, but it's they're making them want to ship faster, right?
And it creates kind of a self-fulfilling prophecy.
Exactly.
Kind of like mania buying in the market, like GameStop, right? Or Casey.
Yeah, there's no doubt about that. And on the flip side, right? So now we're seeing it get choppy. And you saw, global container rates had started to, if you looked at the freight futures, it started to peak, a couple months ago. Well, it getting choppy is, in my mind, a representation of that price action where you have better data than you ever have had before. Typical seasonality and rates. You're sitting there saying, okay, there's new entrants to the market. There's a lot of pressures to the downside on these rates, and so we're going to try to push rates lower because maybe we have already shipped a significant amount. We know that we should be paying in this much. So that's where I think this choppiness starts to come into play. But it's also I think a lot of these companies understanding that this can't go on forever in terms of what's moving for peak holiday retail season. You really are going to see peak season volumes trail off here in the next couple of weeks, in my opinion.
Right. Yeah, I mean, shippers got burned so badly last time. You got Home Depot buying their own ship, and Target paying $1 billion for transportation. Maybe it's, the case of understanding, okay, we've been in this trough for 30 months. And we know from recent experience that when this thing swings, it's going to be ugly. So maybe it makes sense to get on the right side of things, start paying a little bit more for contract rates. Your point. I mean, like, how much longer can we stay in the dumps here?
Yeah, it's the way July 4th played out, it was just like the dominoes. And we're talking about if this import volume was going to cause significant volatility in the truckload market, which again, you're talking about what are patterns that people recognize from years past.
And it has recently, right? I remember you writing an article a couple of years ago that, was directly correlated with container volumes and sent the market into a tizzy.
And that speaks to what that data is, because if you're looking at forecasts, you're looking at predictions, we are talking about actual data, but that data is coming from overseas on the ground. So it's not a forecast. It is directionally representative of what is expected just on those vessel transit times. So, people had reached out and said, you sure called this volume coming into Los Angeles. And it's not me calling that in terms of predicting the future. It's just simply looking at it and going, this is how this is going to play out, 15, 30 days from now. Yeah. And so that's happened, right? So like that part of the thesis is played out for sure. Now, the question becomes, how well can those inland side assets, maintain that record volume or that close to record volume moving into September, October, before truckload comes in as kind of that rescue option. And so if you look at having your stuff on the store shelves, I mean, there's a theory that used to go, and this is not, maybe it's gotten leaner because of just in time and all the data that's out there and how these forecasts operate these days. But it used to be like, so if you didn't have your stuff in the DC by September 1st, you're going to be in trouble for that peak holiday retail season. I mean, going to Home Depot, when did they start putting Halloween stuff out? It was crazy. It was like 2 months ago. Right. So you're looking at that timeline now, and if they're running leaner, maybe they have a couple of weeks, 3 weeks, but you're already seeing it. You're already seeing these expedites picked up on the West Coast, and I think it's just that pressure it could put on the spot market is pretty extreme, because what else is booming at the moment, right? Capacity may get sucked into these areas where there's signs of life, any signs of life, and that could pull capacity from other markets, and it could really shake things up a bit. I mean, will it be as extreme as we've seen in the past, the COVID era? I think probably not at this point. However, I just think it's something you shouldn't underestimate or shouldn't be looking at if you're a shipper, or broker, or carrier.
Yeah. Maybe it will. Maybe it won't be. I don't know. I mean, does it seem like if you look back historically at the peaks and valleys and the cycles of the freight market, that do the booms and busts get bigger?
Well, when you add trillions of dollars of stimulus, I think we've learned that does that. I mean, you're really talking about the greatest boom, greatest bust, the great freight recession. An appropriate term for this side of the cycle at this point. It's been so prolonged. Right. That stimulus money, that government money during COVID, still having an impact by keeping carriers afloat. I mean, Freightways did pretty significant research into what the Small Business Administration had done as far as the amount of money they had loaned out, the fixed interest rates for 30 years. I mean, they're basically low rate mortgages, much lower than you could get a mortgage for now for 30 years. I mean, you're looking at carriers hanging on, that may be hanging on by a thread, can maybe afford to have waited until this part of the year to see if things turn around. But that spot rate failure in Labor Day tells you the market's still not well balanced. The risk is increased to those carriers and then potentially going bankrupt. And I think the further you move that timeline down the year and into next year, the more robust that bust could be. So we've seen that big boom, but if you look at carrier exits, it's been this flat, net carrier exits since July 2022. There's an average of 337 carriers that have been leaving the market each week. That could increase significantly if things don't turn around. But if they do turn around, there's also that argument where it's like it will just keep things further deflated in terms of like spot rates. If they go up, won't go up as high. But if you take 10% of those carriers and remove them from the market, now you've got increased exposure to volatility. So that next boom cycle, which I'd say almost everybody consensus at this point is saying, if it doesn't go up in 2025, like historically based on all the averages over the last, people like Coyote have been tracking the spot market for years and years and years, the cycle almost always goes up, always finds a catalyst, always finds a way. It would be like the first time in history that it failed, with all these consensus pointing towards this greater truckload upcycle. Not only has it started already, but it will, peak in potentially 2025, 2026.
For sure. That's interesting. Yeah, the PPP piece has got to be huge. And, have to imagine those folks can't hold on forever. And I don't know what the event will be that knocks them out of the market, but
I think it would be pursuing these delinquencies. I mean, they said Small Business Administration is not really set up to pursue these types of delinquencies. So they had turned it turned it over to the IRS and the Treasury Department. I don't think anybody really has a precedent for like how that's going to play out, but I can only assume that their ability to pursue these delinquencies would be greater. Therefore, they would come to due faster. And therefore, the amount of bankruptcies or people admitting to themselves, we got to get out of the market, would be sooner.
Makes sense. Well, maybe it is a good thing the IRS just hired a couple thousand more agents in that case.
Yeah, they wanted to see who would take money and be bad at managing it, and or be, catch some of the fraudsters out there. Maybe no. It was a good thing, I think, at the time. I mean, no one really knew what the next few years would hold, right? But now I think that we're kind of beyond that. It's, the chickens are coming home to roost, and there may be a lot of carriers out there. We just don't really know how many. There's not a lot of great data beyond, pursuing those delinquencies, which we saw. The thing is that BMO data John Kingston had published about, where, man, you saw the candlestick really go up as far as, it's really referring to, the amount of delinquencies or the inability to pay has gone up dramatically for a lot of these carriers in these factoring markets. So it's like, maybe it's happening.
Possible. I mean, Kevin and I were at TIA pop-up conference a couple of months ago, I guess now. And yeah, I mean, the trough has been, it's longer than the peak at this point in time. And typically they tend to mirror each other. So fingers crossed for the bull market, even though it didn't kind of pan out like we were hoping from the container volumes. But hey man, what else is new in the world of Henry buyers? I have a couple stories we might be able to hit on here if we can get to them. But what's the latest? What's up at KCH? How are things back in Chattanooga? How's the fam? Playing any soccer these days?
Oh man, doing great. I'm actually on the team, volleyball team. Undefeated. We're undefeated. We got a big match coming up with another undefeated team this Sunday. That's been fun. 2 kids, 2 boys. That's been awesome. Really loving that. Yeah, man, I can't complain. And as far as KCH, as most people during this, you mentioned just this down period's been arguably as long as the boom. KCH has really been working as I imagine anybody who's really preparing for this next boom would be doing, and really focusing on technology as far as workflows, getting quotes as automated as they possibly can be. That's always going to be kind of an ongoing process that you can fine tune right on the buy side when you're looking at your actual max pay in certain lanes, certain markets, and what you want to really be shooting for. So further refining that internal model, and then really from an RFP perspective, really, fully automating that type of thing where we can, better assess and put, greater value on the things that humans do so well. And that's, really going through line by line, making sure everything looks good, making sure we're fine tuning. I mean, we obviously are very heavy inbound, outbound, southeast. So all those things combined, I mean, it's been awesome here. I'd say that KCH is, certainly leading it, industry leading as far as our tech team. We got about 20 people out here that I work with. Everything from front end developers to internal developers for our TMS. So it's a lot of smart people, man. We're certainly getting really well prepared for that next up cycle and watching the data daily to better craft our strategy for how we navigate those tests.
Yeah, for sure. It's funny. I never thought I'd hear the day that Henry Beyer is spending less time in Excel, more time automating these things. But cool to hear that you guys are, getting the ducks in a row for this impending boom here.
Yeah, man. Hopefully it comes soon. I mean, we're really rate agnostic in a lot of ways, right? Doesn't necessarily matter that the market goes up or down, but I think a rising tide, it definitely lifts all boats. And so it'd be nice to just see greater balance be achieved. I really can't imagine, from a carrier side, it's just been such a struggle, and so many of them, aren't equipped as much with the data to be able to fine tune, their strategy as far as how to navigate volumes and whatnot. But certainly, maybe the Fed will cut interest rates finally, right? I mean, that's really the last thing we can really be looking to help stimulate things, because interest rates, the housing market, and just look at flatbed. Flatbed just is continuing to look soft. You look at spot rates in that market. So hopefully we can get Jerome Powell to finally cut us a little slack here, because I think inflation data, and especially employment data, especially is turned in a way where you can't really argue the fact that economy ain't looking so hot. The economy is not looking good.
Right. Yeah. Those job report numbers, I guess, are a little bit more flimsy than initially reported. But I did see something this morning about refinances on 30-year mortgages being at like a 94% increase year over year compared to last year. I think rates are down below 6% on a 30-year for the most part. So yeah, maybe we're headed towards a more liquid or conducive market.
Craig and those guys over for FreightWaves have been talking about just CapEx spending, like if you're really looking at making big investments of any kind. So we're looking at maybe the corporate sector here a little bit more. Looking at, we are, but we're talking about some people potentially sitting on not only the Fed reducing interest rates, potentially a new president. I think, the freight market, you tend to probably get a little bit more bias depending on which segment of the economy you're in. But I think this it's a pretty strong case to be made that we may be sitting with a Trump presidency. And I think that maybe, corporations may think that he may be willing to cut a little bit more slack. And sure, he doesn't have necessarily full control over the Fed, but I think certainly has the ability to maybe pressure them more than about anybody else. So we'll see. We'll see what the next year holds.
Yeah, for sure. I don't know. They say the Fed is not politically motivated or, doesn't operate from the politics side of things. But I think you may be right that the president does seem to have a little bit of power when it comes to making calls like that. But anyway,
what do they have control of? They have control. Obviously, they have some control over putting money into the economy. We've been spending like we're in a wartime, like we're in a wartime as far as deficit. So in terms of how the government can impact inflation, I mean, that's basically what the Fed is combating at this point. Is all this money that was put in the economy and drove prices, insanely high. And I'm trying to just look at it objectively. I mean, politics aside, that just is what it is.
Right.
So it seems like if you're going to bank your whole, basically causing a recession essentially, with raising interest rates, keeping them there that high for longer. Because I mean, it's just so easy to see, right? I mean, we've been so bearish for so long in the truckload market. Like if you were shorting the market, you're sitting there going, I'm done. I've been, taking all my money at this point because the fund, like your short position would just be insane because you can only wait so long. I mean, in the market can infinitely go up infinitely. I mean, there's really no limit, right? So we're just talking about stocks versus truckload, but the whole point there being
it's a market, right? It's a market.
Yeah, it is the market. I mean, it's why it is so dynamic. It is, like Ken's talking about the price action.
What's the saying? Market can remain
longer than the market can remain volatile or
rational longer than you can remain solvent.
Yeah, that's certainly very true. If you tried to play the housing market in the last 4 years in terms of you sold at the peak, you're hoping you could buy lower. I mean, the housing market's been one of the biggest surprises. In a lot of areas, prices haven't even come down that much. I mean, I know specifically in Chattanooga, you're not seeing a ton of movement. Depends on where you are, but so it's maybe selective. But in certain markets, prices have stayed pretty steady. So houses really haven't gotten, any more affordable. They may start to begin to, but I think people looking to sell and then buy another house, it's really tough right now because if you're expecting mortgage rates to go down, I mean, why would you do that? So why would you not wait? So it's one of those things where the people who can afford to wait and see right now, that's what it feels like, man. This Labor Day fail to the downside. To me, it seems like this wait and see approach. Like maybe we can get away with not moving that freight out of the DC to this final destination until 2 weeks from now. Let's just see how this all goes. I don't know if I'm sure nobody's really expecting anything super crazy to happen, but I think potentially geopolitically and economically that things may be as potentially volatile for the next 3 months as they've been in quite some time. I mean, let's just say that, right? There's a lot of uncertainty right now. And you had a presidential candidate attempted, assassination. And then the sitting president step down and the vice president step up. Politics aside, that just sequentially is nuts, so we'll see.
For sure. Well said, Henry. It's a wild time to be alive. That's for sure.
It is, man. It's for a data nerd like myself, it's it certainly helps to see a little volatility out there to have something to talk about. But I think we're bound to see some at some point.
For sure. But anyways, before we wrap here, I do want to let anybody who's still listening know that one of the funniest things I've ever seen in my entire life was I think it's probably the 2020 Christmas party at Freight Waves. It was a costume party. Everybody came dressed up. Henry Byers, for those that don't know, is like 6'8", shows up wearing a Buddy the Elf costume with his wife dressed as his helper, and it was the funniest thing in the world. Just full size, bigger than Buddy the Elf version there at the party. So that was pretty funny. You got any plans to whip that costume back out this year?
Man, I have to do it selectively, right? There was a Santa pub crawl back when I was young here in Chattanooga that I did it to. Did it once at Coyote, once for Freight Waves. So it's like if there's a costume, reward to be had. I think there was like $100 Stir gift card, which is a restaurant right here. So I was like, I really want to win this thing. It's funny, man. I mean, people get a kick out of it, but it's one of those things you can't do too often. Kind of gets played out.
Yeah, you don't want to ruin it, but No, it's about as
It's a classic.
sure a thing as anybody could have for a costume competition. It's a good rabbit to have in your hat.
For sure, man. Yeah, I haven't really ever done one for Halloween. I mean, I've, I had to think of another one, But I did Paul Bunyan one year, but surely there's some better ones out there. I haven't quite got my dad Halloween costume theme going yet, so maybe I can figure something else out.
Please do. I'm sure whatever it is, it'll be entertaining. But we got football this weekend. You got any predictions coming up? Any college football teams you're stoked on? I know that.
Yeah, for sure.
It is
Vols for sure. Vols for life on this family. I was adopted Vol when I moved to Chattanooga. Met my wife. Her whole family went to UTK. And I'm from the ACC. It's Duke basketball where I'm from in North Carolina. So I think Vols versus NC State, man. I mean, the Vols looked really strong. I really think the Vols, have had their down period. Like, talk about the prolonged freight recession, the prolonged Vols recession since '98. I think we may be coming back around, especially with the NIL money that potentially can get in there. So Vols will beat NC State this weekend, and I look to see them, compete for that SEC championship, man. And I think I expect them to see, at least in the next couple of years, if not this year, in that playoff. I think we would have been in there within the last couple of years, and that'll give us a shot to really compete for a national championship. What about you?
Dude, there's nothing like it. I, like you, became an adoptive Volunteers fan when I was there working at Freightwaves in Chattanooga, and went to Neyland Stadium with Dale Stewart and Preston Brown, and a couple others for the Georgia State home opener, like 2019 or 2020. It was just a heinous performance. It was probably the worst game in Tennessee football history. I think.
I remember that. Yeah, they lost. That's right. They lost
2-10, and had to watch Garantano go out there and just, it was heinous, throwing the ball all over the field. But yeah, fell in love at that point in time, and it seems like they've been climbing the hill ever since then. So it's really cool to see that that stuff going on. There really is nothing like SEC football in the Southeast. It's a full-blown religion.
Yeah, you really don't know. You really don't know like why. It almost seems illogical, or like, well, why are they so? Why is it? Why do you think? Why are you such a big supporter of this team? And then, I mean, it's really beyond even pro sports. I mean, maybe the only thing relatable is like soccer hooligans in Germany and England. I mean, you have that type of crazy fan support. If you go to, and I was there during the Georgia game last year. We ran it back first play, and I know people said that it was like the loudest recorded stadium ever. But man, it's like one of the wildest experiences ever to have a full sold out Neyland Stadium just going bananas. But then we obviously got beat pretty bad by the end, but it was pretty wild to be there for like that first play.
Yeah, I'm sure. Can't imagine.
First play, run it back, and they get crushed. But that's Georgia, man. They're coming out strong this year too.
Yeah, dogs are something else. But I don't know. There's something embarrassing about grown men barking. I forget where I was going, but I know Georgia was playing in the national championship that weekend, and I remember getting to baggage claim, and there was a horde of Georgia fans that gathered together, and they were just barking at baggage claim, waiting for their bags, which is pretty funny. But no, man, there's nothing like Vols fans. I'll never forget watching all the cool videos and stories when the fans took the goalposts after beating Alabama and threw them in the river. But I guess that's another commonality with some of those European soccer teams. They've got the Vols Armada, which is got to be one of the coolest things ever. Rolling to a football game in a gang of boats is way up there.
Yeah, you definitely. It's like that's something that is very surprising. when you start to really think about, like, if number one, most people don't even know about it, but then number two, like when you actually live, on the Tennessee River, like a lot further south, and realize like what that is. You actually transit up the river, like with some of that barge traffic. There's still a decent amount of barge traffic on the Tennessee up that way. Pretty cool to think about. I think everybody likes to think about taking a trip up there with a fam or whoever, some friends. That certainly would be. It seems like a great time.
Yeah, man. Love to do it on the boat at some point. But anyways, man, it's been a wonderful time catching up with you. Got NFL season kicking off tonight. Lamar Jackson and the Baltimore Ravens coming to get revenge on the Kansas City Chiefs, Taylor Swift, and all their fair weather folks there in Kansas City. So absolutely cannot wait for that. Hopefully the offensive line holds together. But yeah, man, it's a great way to kick off this assuredly wonderful Thursday that'll end with a Ravens victory tonight. Still having a hard time sleeping after that AFC Championship loss last year.
Crab cakes and football is what Maryland does, right? The Lamar Jackson, man, I picked him up as my quarterback. I didn't even think about you being a big Ravens fan. Yeah, man, it'll be interesting to see how this goes out.
El Freaky,
Titans don't look great.
Yeah, I don't know. I'm hearing good things about Will Levis though, so that's positive.
Yeah, I mean, I think it'll be a decent season, but I guess when you think about pros, if you're not making a run in the playoffs, it's kind of a year in most cases. But who knows, man? Maybe we'll get surprised.
Never know. Any given Sunday, Henry.
That's right.
But all right, man. Well, anything else you want to hit on, or want to wish each other a happy Thursday here and go our separate ways?
Yeah, man. All good. I appreciate you having me on, and yeah, man. Hope you have a good rest of the week and weekend, big football weekend, and we'll catch up soon, brother.
All right, sounds good. We'll follow up on Kyle's comment here, but
all right.
Thanks, everybody. See you guys.
All right. See you, man. Bye.